Hello, everyone. Welcome to today's session. Happy Thursday, and let's jump right in here. Let me just make sure my drawing tool is open. Market conditions shifting a little bit in the last couple of days to mildly bearish in this bull market, seeing a little bit of support at a couple levels today, especially on the S&P 500. We'll break that down just a little bit more today as well, and take a look at current momentum. We've shifted back into that hold, that range bound, as well as breadth was already there, and sentiment had really had the first real little bit of a tick yesterday. We'll look at a couple of charts there as well when we get over to the indexes. Buy-sell ratio, looking at a negative buy-sell ratio, it's less than 1, I should say, 0.48. And so we're seeing some acceleration with breadth to the negative side, to the downside. Remember that this is just telling us essentially the number of stocks that are in sells versus the number that have buy signals or uptrends. It doesn't include any holds. So as stocks are shifting from a buy to a hold to a sell, and sometimes this can happen all at once. So we'll see. We've got a bunch loaded up kind of in that hold signal, but we're seeing some bounces right here. Actually a pretty decent day across a lot of stocks, even though we're seeing kind of a downturn in the Dow right here. Sentiment, as I've mentioned, is we didn't quite get up to that upper range, and we are still inside of this entire uptrend as it kind of rallied this 50% line. We're still holding in that area and looking like it's a buy the dip scenario. Let's talk about that on S&P 500. Buying the dip essentially is just with that overall bias of we're in an uptrend, and a dip is just a pullback. A dip is just a retracement. So should we be buying into that, or will we find some support right here? That's going to be kind of the big question right now on across the board. S&P 500 actually looks pretty good because we're still right at this support area, and we're getting a little bit of a bottoming tail bar. It's kind of hard to see, but it's bouncing. Markets are kind of, S&P at least is bouncing right here. Let's take a look at the Dow and some of the others as well. This potentially could turn into a really bullish case, okay, where we've already had the breakout. Now we're getting a retest of the breakout. When we retest a breakout, that can really become a springboard level. Okay, what I'm referencing is this is the area that needed to be broke out of it. Price had been here before. That's the ceiling. Okay, once that happens and it breaks through that level, now it becomes the floor, and it often will be retested. Okay, this price area where it had been moving higher gets tested, and what's being tested is if it now is support. Okay, if now we're finding buying or new demand coming at this level, and that's a breakout and a retest type of a formation. It's really bullish because oftentimes you do get new demand, especially on a breakout. If it's the all-time high breakout, or on a stock if it's a 52-week high or an all-time high, and then it retests, and you'll get additional buying because you do get an uptrend and you start to get some profit taking. But that retest is an opportunity for those that maybe wanted to get back into the market or get into or add into positions or whatever the scenario is. A pullback inside of a breakout can be pretty bullish right here. So we want to see that hold up, and really it could hold up, all the way down back to that 236. It wouldn't be quite as clean as if it were to find some support right now where it's at, but this entire zone as of right now should be a support area that the markets, if it continues to break down, we're going to have time to know that typically, unless it all happens in one day. But we're not seeing that today. We're not seeing a lot of fear coming in. Two of the biggest talking points. Let's look at the Dow and the Qs. The Qs right here are technology. Remember, the Qs are the triple Qs. The NASDAQ 100 is the ETF that this is tracking. So it's basically tracking the top 100 stocks of the NASDAQ, which are really the top 100 tech stocks on the planet. So it's a really fantastic group of names, but it can also be pretty volatile as well, and that's happening here. Upside retest some support on the Q is still looking good. Dow's falling apart right here. It's and it really has had a pretty nasty retracement, and even another in the last 2 or 3 days, seen some ugly gaps. If we go over and take a look at the index scans and see on the Dow So you're starting to see buy sell ratio on Dow, really on a lot of these, starting to see some heavy, some aggressiveness to the downside. Here's an example of, the Dow utilities. You've got 2 buys and you've got 2 sells, so that's a buy sell ratio of 1, but you've got 9 that are in holds. So how close are they to uptrends and how close are they to downtrends? So you could have 5 or 6 that go to sell and then jump this up pretty quickly and only because there's not very many stocks in there. Industrials, you're seeing 4 in uptrends and everything else back in holds. So Dow's getting beat up pretty good right here. Microsoft, DuPont, Apple, Walmart, those are the only stocks in the Dow that still are in uptrends, and everything else starting to retrace. So there's no question we're getting some weakness right here. The issue is going to be, is that weakness going to accelerate from here, or are we going to get one more push higher before we start to get to some selling? We're getting really, really lofty in a lot of stocks, a lot of names. I was going to point this out too. This smooth sailing scan is such a great, there's so many great names in here. If you're ever looking and seeing like, man, what stock should I be looking at? A lot of them are obviously in massive uptrends like NVIDIA already, but sometimes you may get something that's pulling back or a new opportunity to add in. They're good. It's a good looking group. I went to this scan because I knew NVIDIA was right here handy. NVIDIA is, and we own this in the portfolio. We bought it on this most recent buy signal. But I wanted to look at this 2-year time frame because this is one of the things we're going to start running into with a lot of these stocks is we're running into typically, and I've mentioned this before, the wave patterns. When we have a wave pattern of an upward trend, it typically will happen in 5 waves rather. Okay, you have the first move, the second move, the third move, the fourth move, the fifth move, or waves. Okay, now this is not an exactness in terms of Elliott wave is a structure. It helps us with the structure. Where are we at in the trend? Okay, and so when we're looking at this overall move that we've had from 100 all the way back down here, starting about almost a year and a half ago, from 100 to 1000, we had the real first big retracement and then the second real big retracement. And oftentimes we do get a sell signal in there, so you'll get stopped out of the trend that we're in, and then potentially an opportunity for more upside. The question is this 1, 2, 3, 4, and we're working on a 5th wave? Okay, at this point, when we start to get in, this is where it starts to feel like stocks can do no wrong. They're in uptrends and they just keep going higher and higher and higher. That's an advantage for us as momentum and trend traders and trend followers, is because that's what we want. We're focused on trading these trending moves here and letting this kind of work itself out, and then we want to get back in when it's continuing to trend. So is it, at some point the trend is going to end, it's going to stop, and it's going to retrace, and typically a 5 waves will retrace all the way back to the wave 4 region again. So whether or not that's on a lot of these stocks, we want to keep an eye on where they're at in their trends, not get in super aggressively. This is a great location to enter right after the most recent counter trend and corrective move as far as an opportunity to jump in. Something here. We've talked about whipsaw. Whipsaw is when you have a signal and then it doesn't advance. Okay, you go from buy to sell. You go from, this might have even had a barely tick of a buy and then a sell, and then eventually this buy ends up taking off. So when we're talking about momentum trades, then one of the things that we deal with is called a whipsaw. And a whipsaw is just a false signal or a head fake. It is just a part of momentum trading. It's a part of any kind of trading, and it's okay, because a lot of times if the stock's going to continue higher, you might get 1 or 2, maybe 2 at the most head fakes, but if you get a third, typically that's not the case. It does happen, but in most cases on a stock like NVIDIA, where everybody on the planet is buying chips from them, that they are fundamentally, there's rationale, there's reasons for it to go higher. At some point that rationale is going to end. We talk about these lofty greed and fear cycles, and a sustainable trend, which is typically something like this. Well, we get stocks that do this, and then they come back, and then they find some support, and then they do this, and then they come back, and then maybe they overshoot this way, and then they come back, and then it comes back up. But overall, it's going to be a sustainable trend to the upside. We're now starting to just see that, that parabolic move on a lot of these names that start to become unsustainable. The way to manage that is no different than the way we would manage anything else, and that is, in this case, we focused on the 6-month time frame, the initial entry here, our initial stop loss. So now we're trailing the stop higher. We're just dragging that stop loss higher, typically with a 236 on a 6-month time frame. So we could say, okay, here as of right now, here is our entry. We haven't moved the stop quite yet in the portfolio, but it's going to be close to doing that. We could do that pretty easily now. We could say this is our line in the sand. If it goes higher, so will this line in the sand move higher with it. Okay, this Fibonacci snap tool automatically will connect to the 6-month time, well, to any time frame on the chart. So if I'm changing my time frame and I go to a 1 year, it's going to find the high and the low of that time frame. Sometimes volume, you get down into there, it gets in the way. So you can click on that one and it'll just remove it, so you kind of see the price pattern a little bit more clearly. But that is going to snap to that time frame. So you can even see here, we're in the momentum zone on the 2-year time frame, all the way back to 910. That's too big of a retracement for our time frame that we're focused on. I don't want that much volatility, so I stick with this 6-month time frame. And now we could say 991's our stop. If it keeps going higher, and then maybe it consolidates a little bit, maybe it retraces and then it goes higher, but it never moves back enough to stop out of that trend, then we stay in it as long as it continues to work and as long as it continues to go higher. Now, that being said, as you get gains, we can also sell. The two methodologies of selling are, number one, rebalancing. Rebalancing would say, okay, we've got X amount of gains on this stock. Let's look to see what we've got currently on NVIDIA. It's sitting right at, we're up 23% on that move. So from here to here is 23%. And so we could do 3 things. Number one, we could say, thank you very much, I'm out. I'm selling it all. I'm done. We're at extreme, had a nice run up. Market conditions are a little bit sketchy because buy-sell ratio is less than 1. We're seeing sectors across the board. We're seeing the Dow, tank. And so eventually these stocks are going to catch up. So I may want to say, I'm going to just take some off the table, whether I'm selling half the position. Okay, now I could sell that. So let me go back. Number one, selling the entire position. Number two, rebalancing to back to the 2%. So essentially the 23% gains that we've got on this, we could just sell those, just sell the gains out. Okay, or we could say I'm going to sell half the position. I'm going to sell back to my 2% allocation. If I purchase 2% in my portfolio and now I'm maybe at 3%, it's probably not quite that high. I could rebalance that. It's a little bit early to do that, but I could do that. If you're feeling like, oh man, well, for whatever reason, if you're adding in those feelings, remember the feelings are the thing that hurt us the most. So make the decision not based on feeling, but make the decision based on you knowing yourself and you knowing that you're going to freak out if it retraces and some of those gains are given back. And if you know that about yourself and you're like, I just can't ride out retracements. They're too hard. They drive me crazy. I get stopped out, or it's too frustrating. Recognize where that fits in your overall frustration meter, and then say, okay, no, I'm good. I'm just going to stick with the trailing stop. If this moves a little bit higher, maybe if it gets to a 50% gain, then I'm going to rebalance it. Again, there's lots of different variations within the same theme, and the same theme is we're moving higher. At what point do we take some of those gains? Okay, we've got to decide before now. We've got to decide in advance before we do that. Okay, or we just is all we're going to do is just a trailing stop. If we're just going to use a trailing stop, then we just use the trailing stop. Okay, and in a lot of cases, that ends up being the better decision anyway, because some of them are just going to keep moving higher. Some of them are going to turn and stop out. It gives us a little bit more little more flexibility to be able to allow for some volatility by not having a big, and the other thing is position size. If your position size is too big and that volatility is too much, then the position is too big. Okay, you don't have to go 2% or 2.5%. You can go less than that. And as I've said before, and I'm, this group is I'm preaching to the choir, but I know that a lot of people watch the recording. So if you're, depending on your ability to manage the volatility, or you're brand new to the system, trade one share. Just trade one share. Okay? Maybe not one share of NVIDIA, but one share of something. Trade very, very small, because then you're learning the process. There's always opportunity, and we may be at the end of this trend, we may be in the middle, we may be at the beginning, but there's no reason to just jump in and say, oh my gosh, I'm just learning this new system, and so I'm going to just pile all I have into this new idea. That's a bad idea, because you're not familiar with the overall system, not familiar with how maybe you're not familiar with a stop loss, or setting up the order, or what happens when I do a market order, what happens when I do a limit order, what happens when I do a stop loss order. Okay, get through that system with one share. Don't get through that system with $10,000 or even $1,000. Trade small. Now, that being said, if you're completely comfortable with all of those things, and how to adjust the stop, and how to set up the order, and how to do all of those things, then obviously you can trade within the trading plan as you're easing into larger and larger position sizes. Right now, we've been about 2% across the board. There's some that are a little bit smaller. And we haven't had any real big high flyers recently, like we did last fall, and where we had a bunch of them that were up, 100%, 150%, some up over a couple 100%. So that's fine. Markets are what they are. We roll with what we get, and in a lot of cases, the markets right now are looking pretty good, and we've got a decent run on a handful of these names. Okay, let me go back. I wanted to go back to finish a couple of other things regarding market conditions. We have bonds. This is a concerning piece of the puzzle still. Now we're seeing bonds just fall back down. Thought maybe it might hold up some support and continue to move higher. Remember, as bonds are dropping, interest rates are going higher. So the market and the Fed and inflation, that game is still the game in town as far as talking points and the future. The markets want some clarity on what the Fed is going to do, and inflation numbers, as they keep coming in, they're still elevated, and so the Fed keeps saying, we just can't do anything yet. We can't do anything yet. They said maybe they'd do 3 rate cuts this year, but these inflation numbers are still high. So bond market's kind of given up on the Fed, and we'll see if that is the case. So most of that rally that happened last fall was because bonds really rallied. Now we're just seeing that downtrend. It's making an attempt here. It's made it a couple of attempts, but that's just a really strong downtrend. That could be an issue that could pull stocks down if bonds can't seem, and interest rates and inflation can't seem to get in order here. We are seeing a little bit of a retracement here. Let's look at ETFs. A few more into sells. We've got a bunch in holds and sells. That's kind of that really is the bias. That's the trend right now. And if we were to look at buy-sell ratio or anything else, it's pretty clear that the markets are pretty fragmented. A bulk of high moving, good quality names are moving higher, and a lot of stocks are starting to get beat up right here. Some of those Dow stocks, that's an interesting thing that's happening currently. Let's jump over to commodities. We're seeing gold. Let's see what it's doing today. Yesterday, I'm going to come back to this 6-month time frame. Relatively flat today. It's sitting right at that 236, and topped out support. It's sitting at all-time highs. At least it was back here. And gold really has some strong momentum behind it. We'll continue to keep an eye on that. There's opportunities there. In fact, we've got, I think, 2 gold trades. We should still have 4 gold trades. We got stopped out of one and then exited another one, and those are continuing to work as well. So that gold trend is still in place. USO oil down another 1.5% today, kind of stuck inside of this base. Thought it might get some legs right here, but just gave it all back. So this is going to be this zone, this range for oil. If it breaks out here, or if it clears this direction, until then we're just stuck in the middle. And I always root for oil to go down. It's just a good thing overall for all of our lives and for the markets and business and everything. And then let's see, we were looking at let's look at copper. here as well. Copper's similar. So we're seeing really some of those metals, gold, silver, copper, with some similar patterns, at least on a retracement. They're all in that momentum zone still on the 6-month time frame, meaning they're all close to or holding or retesting this location. Okay? Anytime we get a retest in this upper box, again, this is the 6-month time frame. I've connected the Fibonacci tool. It's automatically going to drag to whatever high and low is on that time frame, and then that's the time frame that we're focused on for this range. Because remember, we're dealing with it's easy to look back at a chart and say, this or that, or should have done this, or could have done this. It's a lot harder to say, man, what should I do right now? Because the right nows of stock charts are we have to anticipate, and so it's not there yet. That's why we add some of these additional factors to say, what do we need? We need some support, we need a retracement, and then we need a confirmation bar. That confirmation bar is that green bar around a support area, and ideally on some increased volume. That's what we're looking for most of the time. Pardon me. Let's jump back to, let's see if there was anything else really that I wanted to be able to cover. That smooth sailing scam, Abercrombie Fitch. Gosh, this is one of those stocks that sometimes you avoid because it keeps going higher and higher and higher and higher. And this thing is like, good grief, 532% for Abercrombie and Fitch. It's a teenage clothing company, and so I think one of the things that's really fascinating about a lot of these stocks is Snapchat. I brought this up before with ELF. So ELF is a makeup company, and it's a generic makeup company. I don't know all the details, but my daughter introduced it to me clear back here because she says everybody on TikTok is promoting these ELF cosmetics, which are sold at Walmart and Target. So they're very affordable, but it's very good quality. So they're just crushing it, and it's because of these influencers in TikTok and some of those things that are happening. I think you're getting the same thing that's happening on Abercrombie and Fitch, because those teeny boppers, they're buying clothes still, and apparently they're buying clothes like crazy. And this was their earnings report was a blowout, the best earnings report they've ever had. So fascinating stock, fascinating company. We want to try and stick to some of those as often as we can. The ones that are the smooth trends, and Abercrombie and Fitch has been one that's been working nicely. Obviously towards the upper end of the range, but they can go and they can go and they can go and they can go. And if it's if the lubricant is TikTok, to be able to present all of these new ideas to all of these, they're shopping and they're spending, and there are ways for them to share these products, I guess is my point. It's just a different world we live in, to where information and news and trends can happen so fast and in random odd places, like like ELF, or maybe Abercrombie Fitch, or some other product that somebody decides, hey, I want to promote this product on my TikTok channel, and they move companies. It's a pretty fascinating trend that we're in right now. Let me jump back over to, and that's really what we want to focus on. Okay, as momentum and trend traders, this is what we want to see. We want to see NVIDIA. We want to see Dell. We want to see Coinbase. We want to see CLS. CLS now, when you walk into any gas station, these are the energy drinks companies, or the energy drink stock. You walk into a gas station and you used to see Monster energy drinks everywhere. Now you're seeing these guys everywhere. And so it's some of those trends that are visible. They're happening. Most of the time, if they're making any money at all, they're going to show up in the muscle stocks, smooth sailing scans, and some really interesting names right here as well. Even this one, Sprouts Farmers, seeing farm stocks moving higher, food stocks. There's another one here that is, let's see if I can find it. It's in this group. I can't remember the name of the stock. It's an egg farmer though, and their stock has just been crushing it. I want to say it's VIST. No, it's Vista Energy, but that's moving nicely here as well. Anyway, keep an eye on these scans, these stocks, these names are coming up. New buy list is a little bit lean yesterday because of the retracement, and that's just not a lot of stocks moving from hold back to buy. That's what the new buy list is, stocks moving from hold back to buy. Let me just summarize here again, just market conditions. We've got upper end of the range, buy-sell ratio. We're weakening here a little bit. S&P 500, we're sitting right at a support, not that one. I wanted this one. We're sitting right at this support area. We still have a really strong trend moving higher. Lots of names moving higher. Economic numbers are looking good. Profits on a lot of companies are still looking good. That being said, the biggest issue now are bonds, inflation, and the weak market. We've got a little bit of weakness starting to happen. Sorry, I'm jumping around here. I get sometimes just get clicky and talky, and I wanted to end up here. We're seeing some weakness across the board on buy-sell ratio. We saw this weakness on this last retracement though. We saw market S&P 500 on this one. We saw that buy-sell ratio get really extreme to the downside. So even with this not even turning to a downtrend, but maybe holding up in this hold zone, to have buy-sell ratio relatively, not super weak, but weak enough that we may see new demand start to come back in. That's what I'd like to see, and that is the overall bias as of right now. Watching for support at these levels unless things really get weak and start to break down. The Dow is a good example. That's a little bit concerning when we start to see different indices breaking down over. Doing it again. Good grief, Jesse. Here we go. Dow. When we start to see this happening, that's a little bit of a red flag to say, why is this happening among this group? Is it a rotation back out of these stocks, back into maybe small and mid cap stocks, or more tech stocks? Is everybody buying Nvidia and selling everything else? Who knows? There's never an exact answer other than the fact that this is happening. The market is selling off the Dow for whatever reason, but not the NASDAQ or S&P 500. That is what it is. And so there's definitely some weakness here in the Dow, and S&P's holding up. That's kind of the overall perspective. Keep your eye on your stop losses, your position sizes, and your number of holdings that you've got. Those are really the three things we manage and can control: the size of the position, the number of positions, and then where our risk is in terms of stop losses. That'll do it for today's update. I appreciate everyone's time and effort, and we'll see you next time. Enjoy the weekend. Thanks a lot. Bye now.